Hi, and welcome to CPAaccountsirvine.com. Let's talk about understanding accounting vocabulary. When you learn something new, like accounting concepts and terms, it helps to create links between what you know and what you're trying to learn. In some ways, it's like learning a second language, and decoding the new word is part of the learning process. Accounting also refers to the process of summarizing, analyzing, and reporting these transactions. The financial statements that summarize a large company's operations, financial position, and cash flows over a particular period are a concise summary of hundreds of thousands of financial transactions it may have entered into over this period. Accounting is one of the key functions for almost any business. It may be handled by a bookkeeper and an accountant at small firms, or by sizable finance departments with dozens of employees at larger companies. How about understanding transactions? Let's move on to transactions. Transactions are the business activities or actions that build day-to-day and become your expenses and income. Try to think about the term transaction. Actions are business activities, and transactions means across or through. These are the basic building blocks of an accounting system. Transactions are to accounting like the raw materials are to a factory or gasoline is to your engine. The transactions are real, and how your accounting system handles them impacts your business. You must keep a record of your transactions and know how much money your business earned and how much money your business spent. Sounds obvious, right? Ask your bookkeeper or accountant how obvious some transactions are. It can get tricky quickly if you are not clear about what happened in the transaction and how you want it recorded. For example, if you are a carpenter, you might pay cash for a bucket or nails to assemble handmade wooden deck chairs. For the example, the nail purchase is a transaction and will have to be counted as a business expense. In your workshop, you then assemble the chair using a pneumatic nail gun, sandpaper, stain and varnish. The next day you deliver the chair to a customer in a neighborhood town. You hand the customer a sales slip and they then write you a check. That too is a transaction. It is easy to see the transactions when money is spent or received. Did you, however, see the other transactions? The stain and varnish, nail gun use, and chair parts were also part of the transaction. What about the gasoline and the truck used to deliver the chair? Did you have any leftover nails, or did you use them all? Maybe there is a little life left in the sandpaper, but it is not new anymore, is it? If we do not account for those costs, we are missing a piece of the picture, and an important piece that could affect how much money you have at the end of the year. In all your business activities, try to think of terms of transactions, because once you can identify what transactions occur in your business, you will be able to organize them into a meaningful manner. Right now, take a minute to list what transactions occur in your business each day, week, and year. Always thinking in terms of transaction might seem miserly, but it is important to be cost conscious and honest with yourself about all your transactions. Your success in business depends upon it. Some transactions are initiated by customers and suppliers. Other transactions can take place inside your business or back office. The bookkeeping department creates transactions when they adjust their books for year-end considerations like machinery, depreciation, or inventory shrinkage. What is depreciation? Let's say you bought a brand new car, a 2006 Professor Coupe, and you spent $27,500 on this new car. Next year, the car has some dings in the doors, wear on the tires, stains in the seats, and 2,000 miles on the engine. You know your car is not worth $27,500 anymore. This means your car has lost value or depreciated. When it comes to business-owned equipment, you can deduct this lost value as a business expense. Sure, you did not spend cash on the lost value, but with depreciation, this is a transaction your bookkeeper or accounting will activate at the end of the year. On your taxes, it helps you by increasing your expenses like all other cash transactions. Of course, the other side of depreciation means your equipment is not worth as much anymore. In order for you to get a really clear picture on how your business is operating, you need to be diligent and thoughtful about what your real expenses are. Depreciation is a real expense even though it is not a cash transaction. Learning to see transactions for what they are takes practice and contemplation. Transactions affect so many areas of your business that you may analyze the daily details so you can place together the big picture. Buildings, machinery, equipment, furniture, fixtures, computers, outdoor lighting, parking, lots, cars, and trucks are examples of assets that will last more than a year but will not last individually. Transaction affects so many areas of your business that you must analyze the daily details so you can piece together the big picture. Buildings, machinery, equipment, furniture, fixtures, computers, outdoor lighting, parking lots, cars, and trucks are examples of assets that will last more than 1 year, but will not last indefinitely. During each accounting period, year, quarterly, monthly, etc., a portion of the cost of these assets is being used up. The portion being used is reported as depreciation expense on the income statement. In effect, depreciation is the transfer of a portion of the assets cost from the balance sheet to the income statement during each year of the asset's life. For more information and to schedule a free consultation, please visit us at cpa-accountant-irvine.com.